Mr. Erik Solbakken. Erik, thanks for taking time out today and joining us with creator of the Accountant Success Formula. Price Wars is what we're going to talk about, right?
You
Make
betcha.
sure if you have slides to share your screen.
Yeah, I'll be right on that. It made me wish I hear that everybody's making comments about how much energy David brought to the. I wish I had seen it, David. I'm sorry, I've been on calls all day, coaching calls. I'm going to be going to another one after this, but I wish I'm going to have to watch the replay, right?
Yeah, it'll be available
Yeah,
tomorrow.
I'll get the replay in there. So that's great. Okay, so here we go. Play from start. Let's get there. How we go? You got that? You see that, Chris?
Yeah,
All right.
everything looks good.
Okay, perfect. Here we go. Technical issues out of the way. Hi, everybody. So today's presentation is going to be on price wars, how to increase your fees without going to battle with your clients. And so the first thing I want to cover off here is like, who is this Erik guy and why should I listen to him? I'm a CPA, legacy chartered accountant here in Canada with an in-depth tax specialty. I had over 36 years experience in a CPA firm. 26 of those years, 32 years experience working with CPA firms. For the first 26 years, I was in public practice. I had 18 years in a multiple partner firm. And then what happened was my partnership imploded and I ended up having to go start my own practice. So I ended up doing 8 years on my own in my own accounting practice called Solbakken Chartered Accountants. And then what happened was I sold my practice 6 years ago, and I've been working exclusively with accounting firms, coaching them on a program that I called the Accountant Success Formula. And the Accountant Success Formula is a model that I found in my own practice, the pains and discoveries of working in the traditional accounting firm model, the billable hour, cranking out tax returns way into the evening hours and not having a life, to starting my own practice to where I actually we worked no overtime in those last 8 years. None of my staff worked overtime, and I made way more money than I had ever made in the previous 18 years of the other practice. And so now that's what I share with accountants around the globe with a program, like I said, I call the Accountant Success Formula. So I understand the struggles that we face in the profession. And so my goal is to share what I can with you to help you improve your life and gain your freedom back. So I'm going to kind of switch back over into the whole presentation here. And so I'm going to ask a simple question. It's like, why would you want to increase your fees? It may seem really simple, but call me crazy. I'm a CPA. And so I like to have tangible, logical reasoning before I start to do anything whatsoever. You hear a lot of people say, oh, increase your fees, increase your fees. Okay, well, yeah, but tell me why I'm increasing my fees. So what I wanted to do is just kind of outline that first to put us in the right frame of mind. Then we're able to actually approach the subject rationally, and we can start using a lot of the things that I've learned and applied over the last, so we call it last 14 years, that has worked to increase my pricing. So what I want to get back down to, and I alluded to it at the beginning of the presentation, is that I believe every CPA wants and deserves 3 freedoms. And there's 3 freedoms that we get when we have our own accounting practices. And really, when I'm working with my accounting firm clients, I say use these concepts as well and use these as coaching tips for your clients, because every entrepreneur wants and deserves these 3 freedoms as well. But let's focus on yourselves right now for accountants. So those 3 freedoms are as follows. Money. We want to make great money. I mean, that's why we got our professional designations in the first place. I know I did. We want to be able to work with great clients. So that's the second freedom is clients. We want to have great clients to work with. And the last thing is time, is freedom. Like, I want to have free time. I want to be able to decide when I go to work, when I have free time, when I can go on vacations. And one of the things I found specifically on that was the traditional model of the accounting firm practice forced me to not have free time, especially in tax season. And that was, for me, very painful existence. So that every CPA wants and deserves these 3 freedoms. And can everybody hear me? Can you just type in quickly, yes, I hear you, on the message box, on the chat, just so I can see that there's, yes. Okay, perfect.
Yeah, we hear you.
Fantastic. Okay, so there's the 3 freedoms. And so let's go through those 3 freedoms and let's talk about what they really are. So let's talk about the money freedom. And it's really simple math, right? This may seem really basic, but let's just follow me through. There's always a method to my madness, as I say. And so here it is. Revenues minus expenses equals net income. Simple math. So therefore, what we're going to focus on is I'm going to focus on the revenue side. So if we can increase our revenue, we can increase our prices, our net income is going to be higher. We're going to have more money freedom. And so in my presentation, I'm going to be focusing on the revenue side of the equation. So I'm going to be focusing on the pricing side and the revenue side. But when you look at your business model, you have a revenue model, you have an expense model, and then you have a net income model. And so I like to focus on the revenue side of the model, and that's my expertise, and that's what I focus on. Entigrity, on the other hand, they focus on they have a fantastic solution for the expense side. So when you take the pricing model, the revenue model that I'm going to show you, and you couple it with the expense model, which is reducing your costs and on your expense side, you have this incredible combination. So I want to add that to the presentation here, that this is where I'm going to focus on. So there's our money freedom. The second one is client freedom. And so how does increases in prices give us more client freedom? And there's a strange phenomenon that happens in the accounting world and with any businesses. And I like to call it the PIAC. And I'm not going to tell you what that is. If anybody knows what this is, type it into the chat, because I'd love to see if anybody's got this figured out what this actually means. The PAIC, there's a Laura got it. Lower prices attracts messier and needier clients, and higher prices tends to attract cleaner and more appreciative clients. It's intuitive. We know this is the case. So I've created what I call the PAIC curve, and there's an inverse relationship with the price and the amount of pain we experience with our clients. So if you look at it as a inverse curve, the higher the prices you charge, the less pain you experience. The lower prices you charge, the more pain in they are. So, and again, Laura was the only one who put it in there. Yes, it's a pain in the ass curve. So does everybody agree with that? I just want to see if I'm the only one who thinks that. Yes. Okay, good. So there we go. Yes, yes, yes. Okay, perfect. So there's our pain in the ass curve. So we know now that price increases in price actually gives us client freedom. So now let's talk about time freedom. So in the time freedom realm, we're trying to give ourselves time freedom. Well, let's talk about it again. It's simple math. Yeah. And it's very simple math. And so I have, there's one of the things that I do is I do a video blog once a week. I'll have a spot for you to see where my URL is, so you can get access to that. And I do free success videos once a week, but there's one that I had on there that's called 5 Ways to 600K, which outlines what I'm about to show you. But what I do with my coaching clients, with all the accountants that I work with, I said, pick your revenue target first. What's the revenue model going to look like? So remember, let's go back to the calculation. The revenue model minus the expense model equals our net income model. Well, let's pick the revenue model, the target first. And then let's reverse engineer that to get to what we want the revenue to look like. And so the example that I'm going to do here is we're going to use a $1.2 million revenue model. So let's say you want to do 1.2 million in revenues in your practice. Well, how are we going to get there? Well, the first way is you could do $300 tax returns. So you would need to do 4,000 clients to get to 1.2 million. And I'm pretty sure that I'm not the only one saying that this sounds very puke inducing and not really something that I want to be doing. So what if we doubled our prices to $600? Well, the simple math gets to 2,000. So 2,000 clients, $600. How about we go 10 times that? Let's go to $6,000 a client. Well, we'd only need 200. I think now we're getting somewhere a little more palatable to get to 1.2 million. You could go even higher again, go 100 clients times 12,000. And really, if you could really command higher prices, you could, to get a $1.2 million model, you could really have 50 clients at $24,000. There gives you your 1.2. So what we've seen here, and to cap this off, is that the three freedoms, your money, the clients, and the time that you deserve to make great money, you deserve to work with appreciative clients, right? And you deserve to have free time. Those all are driven by the higher prices. So higher prices actually is a path to freedom, which I call it. And so the polling, and I can see that it's already been put up here. I'm very interested in seeing with everybody that's on the call right now, if you wouldn't mind going in and putting it. Are we putting it in the chat here, Chris?
No,
missed
I
that
jumped
part.
ahead. So they already answered. I'm sharing the results
Okay.
now.
Okay.
Kind of split between time and money.
Yeah, it's interesting. It's interesting. So we seem to have it's like an even split between the two. So the time and the money positions. So, but here's the best part. You actually have more control over these three freedoms than you know. And so in the accountant success formula, I show my accounting firm clients how to throttle up or throttle back on each of these three freedoms. So you can go up or down. So you can throttle it up, throttle the money up, or throttle it back. Throttle up the quality of clients back up or bring it back. Or you can throttle up the amount of free time you want to have and throttle it back. So this is why I believe that pricing is such a critical piece to giving you your freedoms. And so we've covered that off. So let's continue along here. And so let's get into the meat of our really the next question that I'm sure you're all asking, is that what determines price? Again, let's go to fundamentals, let's go to basics. And so what determines price? And so could you type into the chat for me here quickly and tell me, what do you think determines price? What determines the price that your clients are going to pay? Type in. We got value, added value, perception, value, competence, perceived value, quality of work, perceived value. Okay, perception. It's almost like people have seen my presentation before. Here we go, perception of value. All right, what determines price? Price is a function of value, right? Customary fees in the area. I like that Patricia put down customary fees in the area. That's one of those price anchoring issues that happen for many accountants, is that we get price anchored, or our clients get price anchored thinking that this is the value of this service. And what happens is that you're taking the masses saying, well, if everybody's charging this, that must be what the value is, right? Because I understand that. But ultimately, price is a function of value. It's how people value the service that you're providing. So really simply, higher value equals higher price, lower value equals lower price. So the thing that we need to be careful about here is that value is like beauty, and it's in the eye of the beholder. So the only thing that really matters is, what do our ideal clients find valuable? What do our ideal clients find valuable? And so the one thing that I found is that you can niche yourself down into a market. You can pick an ideal client avatar, and you can say, this is the specific services I need to give to this client because that's what they find valuable. But I step back and I do more of a meta look at it. And I go, what is the value that all clients, that all accountants could provide in a general sense that would actually add more value to what they're doing, and their clients would perceive more value and therefore be willing to pay more money for it. So and now we're going to get right into the meat and potatoes of the presentation. So 3 keys to increasing your fees, which is increasing value. So how are we going to do that? So key number 1 is positioning. And so what is positioning? Well, after my first 18-year partnership ended, I was completely despondent. I had spent 18 years becoming a partner, grinding it out, thought I had made it to the top of the hill, and it basically collapsed on me. And so what happened is that I went on what my wife calls a little bit of a manic run, and I began to start researching and testing a whole bunch of different methodologies to try and find a better model inside my accounting practice. And so what this led me to was an incredibly powerful tool known as the value curve. And a value curve is a diagram which is used to show instantly where the value is created within an organization's product or services. And so I knew that I wanted to increase price because it would give me more freedom. And I knew that price was a function of value. So logically, I needed to find a value curve that showed me how to create value in the organization where clients would actually pay for it. So when it comes to the accounting profession, the best value curve I found was created by a fellow named Rick Payne. He's a co-founder of a company called Results Accountant System. And if any of you have been around for long enough, you would have heard of Rick Payne and maybe even been part of his Results Accountant Systems program. So this value curve, it's so powerful that when I asked him, Rick, he granted me permission to share this with you. So I've got this in my published book, The Accountant Success Formula. It's right here. I've got a copy of it. There's a free plus shipping offer on my website. Or if you want a copy and you don't have it, reach out to me after this. And I would love to send you a copy of the book. It's in the ASF online course that I have and in all the ASF coaching programs. It's kind of like a bedrock teaching moment. So what I want to do is share this with you. And again, Rick is a very, very generous person and an incredible leader in this space. So he allowed me to share this. So here's the value curve. And hopefully everybody can see this on their screens. If not, you might want to zoom in a little bit. And so I'm sharing a portion of this. There's more to the value curve, and you can get access to this again on my website, which I'll give you details to that later with some bunch of other free PDFs you can download. But I just wanted to focus on this one part. On the left side of the curve here, which we have commodity services. And then on the right is more, we call it the value services. And this works out and shows us the relationship between the type of services you provide your clients and the kind of price sensitivity that they have to your services. And if you look at it, it becomes very intuitive, but it's a great model to finally kind of give this aha moment, go, right. If I'm just providing bookkeeping services, it's naturally the lowest value proposition you can provide your clients. Alternatively, as you go up the value curve, you'll notice that price sensitivity starts to reduce and they become price insensitive, and there's a higher lift on the value because the value continues to rise all the way to the point where it goes to the external CFO. And I'm sure all of you have heard over and over through with a lot of the marketing is that everybody keeps talking about putting advisory services into your accounting practice. Use advisory. Here's how you do advisory services. Well, this value curve explains exactly why you want to be doing those advisory services in there. It's because this is where the value drives the most and the most price insensitivity and the highest prices you can charge. So hence why we have the value curve outlines that phenomenon. So key number one is positioning. To increase your fees, you need to position yourself higher up the value curve. And the maximal positioning is that of your client's external CFO or financial quarterback, which is the advisory services that everybody keeps telling us to implement into our accounting practice. So that's key number one. You can maximize your value and therefore your fees by positioning yourself properly on the value curve. So the second key in here is client conversations, and something that I kind of stumbled across when I was in my practice, and I couldn't quite put the finger on what was actually happening here until I got the concept known as the transformation versus the stuff. And here's the concept: is transformation versus the stuff. And so here's what happened in the first 18 years of my accounting practice. When a client would come in, and I found that none of my peers, and I found that I wouldn't mind everybody adding to the chat here and letting me know. I mean, how many of your mentors or the partners that you worked for when you were articling to get your CPA designation actually taught you how to sell to your clients? Like how many people have actually got like sales training from within their firm? Because I definitely didn't when I was going through the first 18 years. Did anybody else? None. There's none. 0 minus 1. Yeah. So we don't get taught how to actually have a conversation with a client. And so none. You had to learn when you became a partner. So everybody basically had to go through this. But what happened is that I was basically telling them about all the stuff. So here's all the stuff I'm going to do for you, because I thought the more I'm going to do for them, the more value was there. And then they'd want to pay me more. So I said, I'm going to do your personal tax return, your corporate tax return, your tax planning, your financial statements. And what happened is that they didn't pay me as much. They were more price sensitive because it was all about the stuff. Now, here's the second part of this that I wanted to kind of dial into. For the next 8 years in my new firm, I started to focus on what the client wanted. So I said, what did they want in their life? And this is the transformation. And this is what I really want you to take away from this presentation. This is really critical and powerful, is that when you focus on that, they inevitably would tell me that they wanted some sort of pain removed from their life. Like they had lack of clarity. They didn't have financial vision on where they wanted to go. They were afraid of an audit, or they had some sort of pleasure that they were trying to move towards. So they're trying to buy a new home or sell the business and retire. And so what I did is I found that what they were really after was a bigger and better future for themselves. And so when they thought about that bigger and better future, it was the good feelings that they had when they thought about it. So what I did on this is I switched my sales conversation, my client conversation to this. I asked them to explain to me what their life would look like when the pain was gone or when the pleasure was obtained. So it put them into the state of mind as if they had actually received it. So they were in that good feeling state. Then what I did is I said, sorry, I'm having a bit of problem with oh, there we go. I got my slides are working again. So I'd ask them to explain it to me. Once they did that, I would explain to them, I tied my services in to that my services would help them obtain their specific future goals. I didn't say I was doing your personal taxes, corporate tax. I got rid of all the stuff, but I connected their good feelings to what the services I was going to provide them. This is really simplistic stuff, but incredibly powerful. So what happened is that this is where the magic came in, is that this is when the value was the highest. It's when, before I even started the work with the client, they saw that they were going to have a bigger and better future as a result of my services. And so this is a really critical point, is that they created the value by talking about what they wanted and then transferring themselves into the future as if they had already achieved it. So there's where the value was. I connected it to my services, and then the value was created. And before I even started doing the work. And this leads us to key number 3 that I want to get to. I'm checking my time here, make sure we got another 8 minutes. We're all good. So is everybody following so far? We're all good? Not flying too fast? So key number 2. Key number 2 in the client conversations is stop telling your clients what you're going to do. Ask them what they want in their future. Tie your services into helping them get what they want, and then that way you can maximize your value with these client conversations. So here's key number 3 in the billing model. So this is the value price subscription model versus billing by the hour. And so what is value pricing? Value pricing is greatly misunderstood in the market, but I like to simplify it down. It's simple explanation is it's like the Price is Right. Okay. It's like the show Price is Right. If I'm sure most people have seen or heard of that. It's setting your prices as high as possible without going over, and you're over the value. So you need to set the price as close to the value as possible. So following key number 2, I knew that the value in the eye of my client was the greatest before I started the work. And since it was greatest before I started the work, was the exact time to agree to the price. So I would agree. This is where art meets science. This is where I got the price as high as possible without going over to the value. And the value was the highest just before I started doing the work with the client. And so what I created was a value price subscription model. And this is what I did in my own accounting practice and what I've shared with every single one of my coaching clients. This value price subscription model has additional 4 value drivers that increases value just in and of itself. Even if you just change to the billing model, you would increase value and your clients would be willing to pay you more. And there's 4 value drivers here. 1 is the client knows the price ahead of time. Number 2, it smooths out their cash flow because it's a monthly amount. Number 3, they get unlimited access to me to impromptu questions. And number 4, they could cancel at any time. So these actually created even more value. Just the billing model itself created more value. It captured the value from point number 2, but it actually created more value. So the interesting thing is that just from doing this, I found existing clients were willing to pay an additional 25% to almost 100% more than the previous year's annual fees just from the billing model itself. And this has been my experience and that of every single one of my coaching clients as well. And it's the same. So again, there's some other additional benefits that come into here on the billing model, which I'm very passionate about, which I love, is that once you shift from a billing by the hour to a subscription-based subscription or a value-based subscription model, tripping over my own words here, you have additional benefits. Number one, you have no work in progress. So you stop stressing about what to bill your clients after the fact. You also don't have any accounts receivable left because it's gone. So you're not chasing your clients for payment. You have no capital account requirements. So you don't need to support the WIP and the AR. You're not paying all your staff to do all the work and waiting for the money to come in. It is actually coming in on a regular basis. And so the other thing is you get the smooth cash flow for your firm. And the interesting thing as well, if any of you are looking to exit soon, it increases the exit value of your firm. Because if you think about it, cash is the most important thing in the valuation of the firm. If you have smoothed out cash flow on a regular basis, two firms with the identical billing model, the one that has a subscription-based smooth model versus the one that has up and down is going to be worth less than the subscription-based model. So these are incredibly valuable just using the billing model in of itself. So again, to summarize, key number 3, the billing model, it's a value price subscription versus billing by the hour. You capture the value ahead of time when the value is highest. And in addition, by doing the billing, the subscription model, you actually add 4 additional value drivers to your clients. So you can maximize your value with the billing model. So again, to summarize, the 3 keys to increasing your value and therefore your fees you can charge your clients is number 1, positioning. Number 2, client conversations. And number 3 is the billing model. Those are your 3 keys to maximizing the value and therefore your fees. And so here's the last, and I had to get 2 polling questions in, Chris. I got the second one here. And so the second polling question that I'm very interested in hearing everybody say, which key do you think actually adds the most value? Is it positioning? Is it client conversations? Or is it the billing model? So I'm very interested in seeing where everybody falls in on this, because they're all valuable. They all add value, but which one's the most valuable? And so we'll see what we got here. Well, client conversation seems to be the winner, Chris. It looks like it. Oh, he's left or not.
Yes, sir.
Okay, there you go. So I think client conversations is the winner. So here we go. So in summary, you can increase your fees by increasing value and avoid going to battle with your clients. Because you notice that those 3 keys that we talked about, they're in no way are you actually fighting your clients. They're actually going to be happy to pay you more value, pay you higher fees, because you're adding more value in a way that's not salesy or sleazy. You're actually providing them more value. And so by increasing your value, you actually get access to your 3 freedoms. And so in your 3 freedoms, again, is your money, in your clients, and your time. So, and that's the purpose of the Accountant Success Formula. That's why I created it. It was to give CPAs their freedom back. I'm a CPA just like you. I was in public practice for over 26 years. I know the suffering that we endure. So that's why I created the Accountant Success Formula program, is to give us our 3 freedoms back. There's the 2 points of access you can get to me in terms of getting access to the free information, the book, or find out a little bit more about the Accountant Success Formula is under eriksolbakkencpa.com or the accountantsuccessformula.com. And there you go, Chris. We have a minute for a question.